It took me 13 years in crypto, plus losing $50 million. And you're about to learn the lessons that I had to learn the hard way in the next 25 minutes. That's 13 years of dizzying bull runs, savage bear markets, rug pulls, airdrops, 100x wins, and more mistakes than I can count. If there's one thing I've learned, it's this. Most people fail in crypto, not because they're stupid, but because nobody ever hands them a real playbook. That's what this video is about. All the hard lessons, carved out by experience. Battle-tested frameworks that took me over a decade to build and can save you years of pain. Some of the lessons, they're about mindset. Some are rules for your portfolio. Some are about security, timing, or catching the meta before it explodes. But the last one is a foundation nobody in crypto talks about, yet it absolutely determines how far you'll go. So here's my ask. Block out the distractions, guys. Take notes if you need to. And if any lesson smacks you in the face, tell me in the comments which one you're going to apply first. And I must say, guys, this is just my own personal lessons learned. This is not financial advice. I'm not a financial planner, but these are the things that I've learned the hard way and wanted to share them with you. So without further ado, guys, let's jump in. Lesson number one is that you have to put in serious hours. If you guys clicked on this video, it means that you want more than luck in crypto. You want to shortcut years of pain. And just having that mindset already puts you ahead of most people. But guys, wanting it isn't enough. You have to put in the hours. World-class performers invest at least 10,000 hours of focused, feedback-driven practice to reach a high level of skill. In crypto, that could mean poring over price charts, tracking wallets, diving into white papers, reading code, even when it's boring. It means long hours, rabbit holes, and reading what nobody else will read. Every chart that you analyze, every protocol that you research, every smart contract you pick apart, it all compounds. You don't need to be perfect. You just need to outlast the tourists, because in this game, time and the data is what separates the tourists from the goats. That's the greatest of all time. And you guys can be one of them. You can't fake the hours you put in. If you want real edge, you have to show up every single day. Lesson number two, you need to define your time horizon. Let's get real. Are you a trader or you're an investor? Trading and investing build wealth in totally different ways. Different time, different stress, different toolkits. Me, I keep most of my capital parked in a few high conviction projects, then let our partners at Sequence run the active trading playbook for me, because I definitely acknowledged a long time ago that I am not a trader. But you have to pick your lane and define your horizon. Traders often operate in hours, days, or weeks. Investors think multi-year stretches, sometimes 5, 10, or even more years. Once you do, put your financial goal for that lane in writing. Don't just think it, write it down. Break a big target like turning $5,000 into $50,000 into smaller milestones. If your horizon is short, your milestones might be weekly or quarterly. If it's long, you might map them out in annual targets. When you hit those checkpoints, it makes you build confidence. When you miss them, you know it's time to course correct a little bit. Your entire research cadence, your risk decisions, and how you act in the market will flow from that written plan. Review it regularly. Adjust only when the thesis truly changes. Stay disciplined when the market is screaming for your attention. That's how you stop jumping from trend to trend like crazy and start building lasting gains. Lesson number 3, play when macro conditions are in your favor. Now, let's talk about the single most overlooked edge in crypto. It's macro liquidity. That's why we make these macro shows every day. When the Fed loosens policy and money starts flowing, risk on assets, led by Bitcoin, move first. But when liquidity dries up, even the strongest altcoins can get absolutely wrecked. Altcoins go down 70 to 80% and even more. You guys, you're going to want to hear this next part also, because catching the macro turn at the right moment has been one of my biggest career wins. Think back to DeFi summer in 2020 or the meme coin mania of 2024. If you spotted the liquidity shift early, you had time to position before the herd arrived. That's how you avoid the deepest drawdowns and enter before the crowd. And as the mania builds, here's how capital usually moves. You guys know this. First Bitcoin, then Ethereum, then large caps, then mid caps, and finally niche plays, macros, and meme coins. You want to scale in only when momentum confirms each step. Let the market's tailwinds do the heavy lifting for you. If you want to thrive, follow the flow, play the right part of the cycle, and guys, for God's sakes, do not swim upstream. And to give you guys some context, those of you who've been watching the channel for a long time, or if you're new, oftentimes we've positioned in size in some of these plays that have done 100x. And yes, some of them corrected massively. But if you're looking at the correction from the peak of where the top was, maybe it comes down 90%, but maybe when we entered, maybe it's a break even. So even if you bought early and you didn't sell the top, you're still maybe at a break even or maybe just down a little bit versus people who bought the top. So timing is really important as well. Lesson number 4, losses, they're tuition, guys. You got to study them. Like I read a book one time called Failing Forward. It's all about when you fail, figure out why you failed, make sure that you don't do that thing again. And that's tuition for the classroom. It's the price that you pay to learn in the toughest classroom on the planet. You're never going to avoid losses completely, so don't even try. Understand that that's part of the game. The real win is squeezing more insight out of each loss than the money it cost you. Here's how I do it. The moment I close a losing trade, I write down 3 things: when I entered and exited, why I entered, and how big the position was. Then I tag the mistake. Was it bad timing, poor fundamentals, execution slip, or just raw emotion? I name it so I can spot the pattern later. Then I pull out one actionable fix. If it was bad timing, I add a higher time frame confirmation. If my research was weak, I would tighten my checklist. If I oversized, I get stricter max allocations. And that's it. Just one clear adjustment per loss. Once a week, I review my journal, spot the reoccurring mistakes, and update my rules so the same error costs less next time. Losses sting, guys, but they buy experience. Extract the lesson, tighten the system, and come back smarter for next cycle. Lesson number 5. Position sizing is non-negotiable. Okay, this one is special. I learned this the easy way once and the hard way another time. This is the hill I'll die on. Protect your stack first. Chase the moonshots second. Here's a hard truth. Bitcoin has crashed between 75 and 85% in every bear market. Ethereum has seen drawdowns of 80 to 90%. Most mid-cap coins bleed 90% or just disappear altogether. For example, Solana dropped 96% from its peak. Terra Luna, that one went straight to 0. These numbers aren't here to scare you. They're here to keep it real because one oversized bet can wipe out years of gains. I mean, just ask Rand. He lost his entire fortune almost in Terra Luna. And I've done something similar to that as well. And if oversized bets can do that, leverage can do it even faster. Leverage means borrowing extra money from the exchange to make your position bigger. Or in some cases, like my lesson was borrowing money in something like Aave, it was Nexo at the time, and having too much borrowing and not being able to survive a flash crash. And how much did I lose in that one? Well, guys, during the COVID crash, I lost over 300 Bitcoin. Yeah, that's over $30 million today. Well over $30 million today. Yeah, it's really painful to think about. And that's what happens when you don't understand the risk that you're getting yourself into and just what can happen. That's why I just made this video about how to, with the lessons I learned from borrowing. It's the same thing as leverage. If you're doing futures or margin on exchanges, you're also borrowing, right? And you're using leverage. So just as fast as it can go up, it can absolutely go down. To put it simply, at 3x leverage, a 33% dip erases your whole position. Boom, 0, gone. At 10x, just a 10% move against you and you're gone, liquidated, boom. And in crypto, those swings can happen in minutes. Exchanges love it because liquidations feed their profits. But for you, it's handing your stack on a silver platter. Treat leverage like nitroglycerin. Maybe useful for pros and rare moments, but explosive if you're not trained. 99% of people don't need it. And the 1% who do know exactly why they're using it. And likely they've all learned their lessons the hard way, like I have and others. So here's how I size accordingly. I never let a single altcoin grow beyond 5% of my portfolio. And the smaller the market cap, the smaller the slice should be. For large caps, for me, 5% is the maximum. For mid caps, just 2% of my entire stack allocated. And for the small ones, just 0.5% or less. And when it comes to leverage, I mostly just don't touch it. I let Sequence handle my Bitcoin for me. And so far, that's been fantastic. Now, how do I make sure I stick to that? First, I set the hard cap. If a coin moons and drifts past my limit, I don't get greedy. I skim the excess, lock in those gains, and reload my dry powder. I stick to a regular rebalancing schedule. If you make this a routine, a coin blowing up becomes just a small speed bump, not a disaster. And that's the real edge, staying alive for the next opportunity instead of getting wiped out by a single mistake. Guys, let me know in the comments below, what's the biggest loss that you've ever had? I told you mine. It's so painful. It's not even funny, but I just try to not think about it. I'm curious to hear, guys, no shame, safe zone. Let me know in the below. I got to hear yours. Made me feel a little bit better. Lesson number 6, automate profit taking. Surviving is only half of the game. The other half is making sure that when you win, those gains actually stay yours. Picture this. You've just doubled your money on a trade. You're already imagining what that extra cash could do for you. But before you lock in a single dollar in profit, the market flips. And overnight, those gains are gone. The fastest way to stop that from happening is to make profit taking automatic. The same day you set up your buy, set your sells. Use a ladder, 10%, 20%, 30% above your entry, or whatever fits your plan. The point is, the decision is already made, so emotion can't get in the way. Then decide exactly where those profits will go. If you want to stay in the game, sweep some of that into Bitcoin or Ethereum. And if you want dry powder because you need to cover living costs, park them in stable coins, right? The pros I know always move at least half their profits into a safe place so they can pay themselves, cover taxes, and be ready for the next big move. Set it, forget it, get paid, guys. Whether it's through a limit sell tools, trading bots, or scheduled withdrawals to cold storage, automation turns your wins into permanent part of your long-term stack. Guys, I know this all too well. This is another time when I've lost, it was probably around $8 million. And this is just from not having a clear plan in place. When you get those 100Xs, I put 40,000 into something about 4 or 5 years ago, and it turned into $8.5 million. If I had stuck to this strategy, I would have millions and millions and millions of more dollars than I have today. And again, a painful lesson to look back on, but these are all lessons that we learn coming into the crypto game. And yeah, and I don't make that mistake anymore moving forward. Lesson number 7. Price tags lie, guys. Supply math tells the story. What I'm about to tell you could have saved me a fortune. If a coin has a low float and a high fully diluted value, that's a ticking time bomb. Here's a nightmare example. A project launches with 100 million tokens, but only 5 million of them are trading at launch, just 5%. The other 95 million unlock over the next 2 years. In the first month, supply jumps over 80%. In 2 months, there's another 44%. Fast forward a year, and the float is 10 times higher than when you started. That, my friends, is hyperinflation. Just like Venezuela or Argentina, price gets crushed by supply, even if demand stays strong. I learned that the hard way in paid network in 2021. Guys, the chart hit $6. The FDV was 3.6 billion. But the unlocks from investors and everyone else nuked the price. When we launched Commonwealth, we had learned from that. We made sure 98% of the tokens were liquid from the early days. No stealth inflation. So before you buy, remember, a coin under $1 can still be expensive if the FDV is in the billions. If the float is under 20% and tokens vest fast, size down or get out quick. And if unlocks look like a ski slope, wait for the cliffs to clear, respect the supply math, or get wiped out. You have to go use different tools that you have to look at these. Oftentimes things like CryptoRank, or there's some unlock calendars as well that show you, and if you go to, let's use that example before, 100 million tokens and only 5 million of them are unlocked on TGE. That means you'll have 5% supply. Let's say that all of them are at $1. The tokens are $1, right? So the FDV is 100 million, but the circulating market cap, the market cap on CoinGecko or CoinMarketCap is only 5 million. So you have all of that $95 million that still need to be entered into the market. There's likely no way that there's going to be real demand for those tokens, and the price can only go down from there. All right, guys, this is important. Lesson number 8, protect your keys and your approvals like your life absolutely depends on it. This one is not optional. Skip security and you will get burned. Hacks, phishing, fake wallets, scammy contracts. I've seen it all, guys. I lost $30,000 in Bitcoin to a scam in 2015. They hacked into my account. That would be over $7 million today. That was a painful lesson for sure. Here's how to lock it down. Start by learning the tricks, phishing links, scam apps, malicious approvals. There's plenty of great videos on this. Spend some time, a lot of time, learning about OPSEC, operational security. Keep your life-changing coins offline in a hardware wallet. It blocks 99% of the remote attacks. Use separate accounts, one for your day-to-day swaps and trading or DeFi experiments, and another just for long-term holds. That way, if your hot wallet gets wrecked, your main stack survives. Revoke approvals regularly. Any contracts you've ever approved can drain your tokens at any time. You need to run something called a revoke tool as often as possible. Anytime after you do anything interacting with contracts. I use revoke.cash, and this helps clean up old permissions. Sometimes you see these hackers that get permission and they wait until your wallet is fat and juicy before draining it. So use something like revoke cash and go check it often. Again, guys, this is a pretty high level video, but any of these things that I talk about, there's gonna be great tutorials all over YouTube, or if you just ask ChatGPT how to do it, it'll help you. Okay, guys, now lesson number 9, surf narrative cycles and exit before the crowd. I still remember the one narrative run that completely changed my portfolio and another that almost wiped it out. Narratives move markets. If you can catch them early, ride the wave and exit before the hype collapses. You're in the driver's seat, guys. So how do you spot them? I'm always watching X, Reddit, Telegram. I'm listening for new buzz and tracking where the money is moving. You guys know, if you've been watching the channel for a long time, we often get it way ahead of these narratives. But making sure that you get off of them before everyone else, that's a really important thing as well. So I use tools like Lunar Crash, Sentiment, CoinGecko, Kaito, Nansen. Remember when AI tokens started heating up in 2024? I saw about $5.2 billion pour in before most people had even pulled up the charts. But you always want to check the fundamentals too. Look for real user growth, rising TVL, actual revenue, token utility and token demand, and if there's strong developer activity. If a project's the real deal, it'll show up in the data, not just in the social media hype. Remember AI16Z Eliza OS? Amazing project, was the #1 developer repo on all of GitHub, but there wasn't real token utility. And again, even just recently, I got caught up in the hype and forgot to take profits on that one. So I went from having a over $2 million stack to less than a $300,000 stack on that one as well. Remember, one good or one bad decision in a narrative can completely change your cycle's outcome. Now it's up to you which side you guys want to be on. Lesson number 10, focus on a few high conviction plays. This is something really important to understand. If you hold 20 tokens and spend 30 minutes on each every single week, that's 10 hours every week just for research. You'll go absolutely nuts and still miss what matters. I mean, it's just too much to simply keep track of when you've got 20, 30, 40, 50 tokens. Now, if you have 10 or 20 tokens that are just all really tiny, like 0.1% of your portfolio, and those are your moonshots, fine. But you're going to hold the majority of your net worth in tokens that you can constantly stay on top of, constantly look at the X feeds, the Telegram, talk to developers, listen to AMAs, and look for what's coming next. This is what the best traders and market movers do. They look and they follow these projects closely, and they look for signs of weakness or signs of strength and then position accordingly. So again, have a majority in stuff like Bitcoin, Ethereum, and then much less, but also a good amount of what you have your main stack in majors. And then if you want to have a bunch in these 100x gambles, yes, I said the word gamble, and realize that everything that you have in this gamble category is likely to go to zero and you could lose everything. And you need to be okay with that if that's where you're going to be, because you can't possibly keep track of these meme coins and crap coins and shit coins that aren't developing, aren't building. That's impossible to do. So if you're willing to lose that, okay, fine. But the meat and potatoes, the main stack should be in things that you can follow closely and understand what's going on in that ecosystem. Lesson number 11, assume every pitch guys from every influencer, everyone else, they're talking their own playbook. You guys need to do your own research, right? Most of what you see in crypto media is a paid spin. Sponsored chills, back alley token deals, influencer pump and dumps. If you take their word at face value, you will get wrecked. I was quoted in the New York Post some months ago warning about this, guys. I said, quote, "You get influencers who are given tokens in exchange for promoting a certain project. It should always be disclosed, but not everyone has a moral compass to do that. So here's your firewall. Spend a minute checking supply, unlocks, and on-chain activity before buying anything. If the hype doesn't match the fundamentals, just pass. You don't need to try to catch every token that every influencer talks about, or your KOLs or your TikTokers or whatever. It's okay to miss out on ones, even if they go to the moon, because more often than not, they don't, right? So that 1 minute of research can save you thousands of dollars and lots of regret. Number 12, guys, is network aggressively. If you really want to be a master in this game, you need to network and build relationships. You're not going to do that online necessarily. You can go to events, you can DM builders, jump into Telegram and Discord where the devs hang out. But really being able to go to events, and I know sometimes it can be expensive to travel internationally, but there's probably plenty of events. Go to the big ones, the big conferences, the big events, the big meetups for communities. And if you can only afford to go where they are locally, then do that. Or if you have to go on a road trip for 6 or 8 hours, do that. But go meet people and network. This is how I spent, I've been in this space since 2012. But when I finally decided it was time for me to get more involved as a builder and investor, I spent from 2017 all the way till COVID, almost nonstop. And I was fortunate enough to be able to do this, but I flew all over the world on my own expense, paid for my own hotels, my own airfare, my own food, everything like that. And I went to all the big events and I met everyone that I needed to meet. That was just hardcore. But that's what it takes. I mean, that's a cost I had to burden before I started making any money at all. And I understand that, again, that's out of the question for some of you. That's fine. Do what you can within your means to be able to network. Super important. Just a quick word from our amazing, wonderful, trusted channel partner. Imagine this. Bitcoin hits $1 million. Solana smashes through 1,200 and Sui skyrockets to $100. Now, imagine the tax bill when you finally cash out. Yeah, guys, that hurts. Uncle Sam's going to crush you on it. But what if you could stack all that upside tax-free? With Bitcoin IRA, you can. It's the retirement account built for crypto believers. Zero boring paperwork, zero mutual funds, and all the upside of Bitcoin and your favorite altcoins growing in a tax-advantaged manner. Rolling over your old IRA or 401k just takes a few clicks. Over 200,000 people are already using it, so your future doesn't get left behind. If you want to keep more of your gains and let your coins work for you and not the tax man, get started today, guys. Click the link below. Let them know Kyle sent you, and you can earn up to $1,000 in rewards. And now back to our very important show. And now the most important lesson that almost nobody's talking about. And guys, lesson number 13, if you want to be great in crypto or anything, your mind and body have to be clear. These are powerful. If it's not clear and you're not healthy, you're not getting sleep and taking care of yourself, this is a huge distraction. You're operating at less than optimal. And I've been there myself, guys. I've been there myself to where, sleeping hardly at all, thinking that I was hardcore entrepreneur, getting just a few hours of sleep. But there's a lot in this category that's super important, right? The science is crystal clear. This can hit you so bad. Addictive substances destroy memory, learning, and decision-making. Porn rewires your brain and reward system, leaving you numb to real life. And sleep is the ultimate performance enhancing drug. If you get sleep deprived, just 1 week at 5 hours a night drops your memory by 20%. Imagine you do that week over week over week. Concentration by 23%. And test scores by a whopping 35%. If you're sleep deprived, you might as well be drunk. Literally, it's the same impediment. You need at least 7 hours of sleep a night, and there should really be no excuses here. I know that in prior stages of my life, when I wasn't getting enough sleep, sometimes only 3 or 4 or 5 hours a night, that I would have made much better decisions that would have more than made up for what I thought I was doing the extra work. I was doing the extra work because I wasn't thinking clearly, right? And so it's really important to get health and fitness and sleep. And exercise is nearly just as powerful as sleep. Every workout releases dopamine, serotonin, and powerful endorphins, your brain's own performance enhancers. It also triggers something called BDNF. It's a kind of brain fertilizer that grows new neurons and connections. That clarity you feel after a run or a lift, it's real. You're literally upgrading your brain every time that you move hard. I've even started another channel. I need to follow up more. I haven't had a lot of time, but I'll talk about it more when I put more effort into it. But if you haven't noticed, if you've been watching the channel for a long time, I've been taking my health very seriously, and it's a total game changer, guys. Total game changer. Sleep and exercise and diet, super critical. So guys, start this today. Cut out the brain killers. Treat your sleep like a key part of your game. Move every day, lift, run, exercise, stretch, whatever it is. This is the best edge you'll ever have in this space, is to have a clear mind. So guys, there you have it. There's 13 lessons that took me 13 years in crypto to learn, and you just absorbed them right away. Even if one of these ideas hit home, imagine what happens when you start applying all of them. This is how you win, not by chasing the next shiny thing, not by aping in whatever's trending on your feed, but by mastering the basics so deeply that they become second nature. That way, when the next leg up comes, you're fully prepared to dominate it. Guys, if there's another topic that you want me to cover, make sure you drop it in the comments. Let me know. I read all of them. And look, there's a lot of moving parts in crypto. If you can't afford to spend several hours a week doing deep research, or you just want someone who can help cut through the noise, that's exactly why I started this YouTube channel. We spend 24/7 tracking the markets, curating the best insights, and bringing you top tier alpha, so you don't have to do it all alone. That's part of why we're here in this community. So guys, here's the next move. Drop a comment below and let me know which lessons you're gonna start to implement first. And also make sure to join the Telegram group, guys. There's a link in the description. I'm gonna be talking about these things more and more in there, and I'm gonna be more and more active in there as well. And follow me on X if you want more mindset. I'm gonna be posting more there as well, because crypto rewards clarity, consistency, and timing. And those come from the kind of person that you build, not just the portfolio that you hold. Guys, let's work together. And remember, stay sharp, stack your Satoshis and some ETH, and I'll catch you guys in the next one. See ya.